Hello and welcome to That Investing Podcast. We're on episode 25 and I'm joined again today by Charlie Archer. How are you?
Excellent, Simon. It's been a very busy week. How have you? What have you been up to?
Oh, you know, the usual stuff, Charlie. Dealing and diving and all that kind of thing. I'm also very pleased to announce that we have Asher Tan, CEO from CoinJar, joining us today. Hi, Asher. How are you?
Good, thanks. Hi, Simon. Hi, Charles.
Great stuff. So, Asher, we've got quite a lot of questions for you today, which will be very interesting with the current rulings with the FCA on cryptocurrency exchanges, etc. But could you just give us a background on your role at CoinJar and how this all started, please?
Yeah, sure. I started the company in Melbourne, Australia in 2013 with my founding team. It's quite a typical startup pathway. Startups were, very in vogue 2013. We looked at ideas we wanted to solve and, Bitcoin definitely caught our eye. So we were one of the very first Bitcoin exchanges in the world, grew the platform in Australia, and sometime in 2017, 2018, I decided to move to the UK to get things started here as well. So we've got two markets we service, Australia and the UK, and we've been going since 2013, so 10 years this year.
Excellent. I've just checked you out on LinkedIn, actually, and just looked at your profile. Very interesting profile as well. So we hinted at this on just as we started this interview. There are crypto regulations coming through from the FCA which take effect on the 8th of October, I believe, and you and your team have been quite prolific in updating us on what's going on that. So CoinJar is on the list of regulated crypto exchanges with the FCA, is that right?
Yeah, we are registered for AML purposes under the crypto asset regime.
And what are your thoughts on why the FCA is doing this now? Is it purely for AML? Is it purely for finding out where we can't really find out where crypto funds are coming from, but they're obviously trying to, restrict exchanges selling crypto assets to UK customers without being on the platform. Is there any process you can explain as to how the FCA have gone through this?
Yeah, I think crypto regulation has been coming for some time now. And, for the most part of the last 10 years we've been operating, they've been, quite light in respect to regulating crypto. The FCA has obviously taken a keen interest in this. And, the first thing when we started in the UK, they came up with a crypto asset registration for AML, saying, if you want to operate in the UK, these are some guidelines that you should take for record keeping, for reporting. But this new upcoming raft of regulations takes it even further. And I think most interestingly, it not only affects registered exchanges in the UK, but it applies to all exchanges providing services to people in the UK.
Yeah.
So, cryptocurrency being a very global thing, there was always the question of, what happens if we're based in another country and you could still access it? And I think the FCA has come out with very clear, unambiguous guidelines saying that as long as the customer is in the UK, these regulations also need to be followed. So I think that changes things quite a bit, especially not many of the international exchanges don't have a UK presence or haven't been actively trying to comply with the UK regulations. But the regulations are quite clear and unambiguous. I think the question is, what happens if you do break those guidelines?
Exactly.
How actively is the FCA going to police this? But the penalties are quite severe, include large fines and even jail times for directors of companies. So as a director of a company, I'm very self-interested to make sure CoinJar is operating within the guidelines of the FCA.
Absolutely. No prison time wanted here either. So obviously as an affiliate business, and we do promote CoinJar amongst other crypto exchanges, some of which are not regulated, and I think they're currently running around trying to get that regulation coming through. So yeah, you're absolutely right. We read the regulations recently, only this week actually, and you're right, there's some hefty fines going on there if you're found to be promoting and selling crypto assets to UK customers. So what you're saying is effectively you could actually be operating outside of the UK but promoting to UK customers. The FCA guidelines still apply even if you're not operating in the UK, is that right?
Yeah, that's absolutely correct. And I think for a lot of these global exchanges, I mean, the UK is quite a large market. In the internet, it might not be the biggest market, but it's still obviously we've set up here, so we think it's a great market. But that makes a lot of questions to companies who haven't taken the efforts to comply. So, I think one reaction we've seen is that exiting the market completely or temporarily until they can sort things out. So I think one aspect of this is the time that companies have been given to comply, and it's been, I think, less than 6 months altogether, which is a relatively short timeline for a high bar of regulation. So if you haven't had plans before, I don't think it would not be feasible. So I think these companies, weighing the risk and weighing the ability to execute, have just decided to either pause their UK operations or exit the market completely.
Yeah. So you were actually regulated quite early on, weren't you, in the process?
Yeah, I think we were one of the first exchanges in the UK to be registered for this crypto asset register, which, again, it's not a license. It basically says that, this is record keeping procedures, this reporting procedures, and, we've committed to adhering to these guidelines.
Yeah, and there's absolutely, and there's only so much you can do, but it'd be interesting to see how much policing the FCA do on this. So clearly, with our site and our recommendations, not recommendations, actually, it's not financial advice, is it, Charlie?
No, never.
No. If you've ever listened to any of our podcasts, actually, we have a bingo card of how many times we can say not financial advice. And if either of us are coming up to it, I have a little cheat card there that says not financial advice. So we're going off on a tangent there. Let's jump.
Well,
go on, Charlie.
Sorry, this is an interesting tangent. You jogged my memory. I like the XRP lawsuit in the US, and a lot of the arguments around regulation around crypto is a lot of crypto firms say if you regulate too much, you're going to stifle the innovation. What do you think about that, Asher? Do you think that's a reasonable comment, or do you think regulation is something that's needed?
I mean, the regulator's prerogative is to keep customers safe.
Yeah.
And I think that's what the FCA feels that it needs to do. So I think that they're regulating to the best of their ability to keep, the British public as safe from crypto scams as possible.
They have to be seen to be doing something, can't they? It's not they can't just be blasé and say, crypto's not regulated, we can't do anything about it. No, they've clearly done the right thing. And to what level that goes to next will, time will tell. So, it's interesting stuff. So, shall we talk a little bit more about CoinJar? Because I'm super interested in your exchange and your platform. We've put together a couple of questions here. So from a cursory glance at your site, it seems that buying and selling of crypto to GBP, making a purchase with the CoinJar card, incurs a 1% fee. Is that right? Is it competitive compared to others?
Yeah, so we've got a 1% fee on transfers in-app. So if you want to swap between BTC and GBP, it's a 1% fee. We feel it's 1% is quite a cheap fee for peace of mind, especially in the crypto space. But definitely, if you're a trader, you make several trades a day, or just trading focus. We also have CoinJar Exchange, where fees go from 0.1% to even 0% for certain market makers at high volume. So I think we've got a range of products, but most people just prefer to use the app. And I guess in crypto, a 1% fee for the convenience and ease of use is, I think, relatively a good price to pay. But definitely, we also have options for traders who are a bit more price sensitive.
Yeah. Okay. Great. Good answer. The right answer, obviously. Charlie, question, please, Charlie.
Here's a question. Okay, so you keep assets in offline cold wallets. Not everybody does. And this is a lot safer. But from an administrative point of view, it's a bit of a pain, as far as I'm aware. Why did you decide to do this? Are client funds pretty much completely segregated then?
Yeah, I mean, when we first started in 2013, I think the landscape was quite different. It was, hot and cold wallets, and warm wallets were sort of coming to use. And now, in 2023, it's quite a different landscape. There are vendors for institutional sizes and all kinds of service providers.
Yeah.
So there are different types of technologies out there, such as multi-sig and MPC, different types of cryptography to basically give organizations better control over their wallets. So I think like a typical process for some of these vendors we use have, for instance, a 2-person requirement for video calls to maybe unlock or make some changes to these wallets. So I think they're more geared toward big exchanges and institutions who use wallets. I mean, we still use cold wallets to some degree, but we also use different vendors with different walleting solutions. So I think any big crypto organization now probably has all manner of wallets, user segregated with different controls, usually administered by a third-party vendor who, in most cases, is a specialist.
Yeah, I mean, you after FTX and a couple of exchanges have collapsed now. The bigger ones, I guess, client funds and keeping them segregated, and that safety element, I guess, this ties into what we were saying about the FCA, is probably becoming more important than ever before.
Yeah,
I would say. When people are looking for an exchange,
I think there are quite a few levels of that. I think that's the safeguarding of the crypto assets per se. So that's, the wallet security itself. It could come with a level of insurance. And then I guess there's the financial controls itself. Are those segregated? Are those labeled correctly?
Yeah.
And then I guess there's a management itself as well. And how do they want to respond to regulations and, interact with these regulations? So, I think there are many levels of safety and security that crypto asset exchange, and I think wallet security is one of the core tenets. But I guess in this day and age, we're seeing how, regulators also have a part to play, with some sort of pressure, rightly or wrongly, on how crypto asset and crypto exchanges operate.
Yeah, well, it's the problem with it is that cryptocurrency, I mean, one of the larger arguments over the past few years is, are cryptos the securities or are they commodities, right? And that's what these court cases in the US have all been about. I mean, my personal view is that they're neither, and you need a separate regulator to regulate crypto. Potentially in the US, definitely. I'm not sure whether so much in the UK. I mean, this ties into my next question. You've got about 50 cryptocurrencies on the website available on CoinJar, but there's thousands available. What criteria do you use to select which ones people are allowed to buy on the site? Are there criteria that you have?
Yeah, we have a pretty strict listing policy,
right?
Which includes, sufficient liquidity for the coins and other exchanges, project viability. Generally, we're not the first to list a project. So, we only try and list projects which I think have a bit of momentum and history and, have a bit of a future as well. So we try and be quite selective of how we choose assets. And, for instance, again, the intersection of regulation plus crypto, we don't have any privacy coins, another thing that, isn't allowed under the FCA regime. I think we're keen to add more. I think we're keen to give our users as much options to try and pick and choose coins as they wish. But I think we also, exercise a great deal of scrutiny over what we put on our platform as well.
You have high standards.
Yes.
Maybe is a good way of putting it. Yeah. It is interesting into it because I think one of the, I guess there's two classes of crypto investor. There's the people who are buying, say, Bitcoin or Ethereum and thinking 10, 20, 30 years ahead. And then there's people going for, whatever the latest coin is and trying to make $1 million in the space of a couple of days. Obviously, can lose all their money. So obviously, I guess you're in the kind of the first category rather than the second.
I mean, I think you can do both with our platform if you really wanted. I'm personally here to provide a platform to, provide as much benefit to as many of our users as possible. So, I think we try to steer the platform into as sustainable state as possible.
So, say I'm a retail, I am a retail investor and I have cryptocurrency, right? You do have larger competitors. Why would I, as a retail investor, choose to go to CoinJar rather than, say, Binance or Coinbase? I've seen the CoinJar bundle. That looks like a really cool feature.
I think going back to the sort of topic of this conversation, first, I don't believe either of those exchanges you mentioned are FCA registered.
Very good. Straight away, good
you
answer.
might not be able to even access at least maybe one of them.
Binance, gone.
In the near future, right? So I think, there is, if you're going to use a centralized exchange, I do think there's a benefit trying to use one which has, tried to invest in a local experience. This goes from, having ways to deposit and withdraw effectively and cheaply and quickly, not pay high fees and that, having some sort of local presence that, acknowledges that the rules and regulations and hopefully provides support in the context of where you're at as right now. So I think, that's usually the main priorities of why you would pick an exchange like CoinJar. But on the product side, I do think we have got quite a few features. We've got, great apps on the App Store and the Play Store. We've got, as you said, CoinJar bundles. We've got the exchange for more savvy traders who want to be a bit more proactive with their trading. And if you look at our Trustpilot, we've got a good history of legitimate reviews. So, I think it's an experience. If you're after something super exotic, we might not have it. But I think for most people who are getting started in crypto or just want a reliable way to get crypto to cash into your bank account or vice versa, definitely CoinJar is something I would consider.
So, flipping that now, because you don't just appeal to retail investors, you don't just market to the smaller guys. You've also got institutional grade solutions for market makers, as far as I'm aware. How do those work? What do you do there?
So I think one aspect is we are a retail focused platform. So we have a lot of retail order flow. So I think to balance that, we also try to incentivize market makers to trade with retail order flow. So we've got quite an aggressive price point. So we've got competitive fees on CoinJar Exchange. And so UK market makers can access our CoinJar's own retail order flow from Australia and the UK. In terms of multi-currency support, we also support that. So GBP, USD, AUD, Euro. We also have these options for more professional traders.
Yeah, it seems like it's going to be quite a fast-growing business, even though you've been up and running since 2013. Do you have more expansion plans, more countries maybe? Or are you sticking with just the UK and Australia at the moment?
Yeah, we're working on the US, which, again, has a new
big market
raft of regulations coming in, but also a big opportunity.
Forever and ever.
We have our sights on European market as well. There's some new European licensing around the corner, which, will probably apply to us. So we've got a pathway into Europe as well. But, we try to be a bit selective and, I think, again, we could be bigger, we could be smaller, but, we try and keep it to the size to offer the level of service we think, should be given by a crypto exchange.
Such wonderful answers. Almost scripted. I really like them. So this is quite a cool one because I hadn't heard of, using crypto credit or debit cards. I mean, they've briefly touched on them, but you have the CoinJar card. And to my mind, that's going to help bridge this gap where people are just using crypto as an investment, will start to use it as currency as well. What kind of fees are there? Is it quite easy to get hold of a CoinJar card? You just go on the site and just, 5 minutes and then you're done?
Yeah, I mean, you can just order one on a website once you've got a verified account. I think the card has been around for maybe about 8 years now. It started in Australia on a debit card scheme there, and we've moved it on to a MasterCard scheme and brought it over to the UK as well.
Yeah.
I think there are lots of questions, as you said. Is this a security? Is this an asset, a commodity? Is this a payment mechanism? And, being so early, starting this company in 2013, I think, we've had to wrestle with all those issues. But I think we've always tried to build product to show that, hey, it can be many things and it can be useful as well. So while the debit card, probably isn't our flagship product, I think it's a really cool feature and super useful for anyone who has any bit of crypto. It may or may not be a day-to-day card, but it's almost always something useful which you can fall back on when you need to use your cryptocurrency at Tesco or anywhere else you choose
on
to.
the debit card drops. Yeah. I don't know. I just Bitcoin. Like, I have some Bitcoin. It's not much in my portfolio, but like, I just view it as an investment for the very long term. Kind of like how I have some gold as well. But having like physical card, not investment advice, not financial advice, Simon. Sorry, but actually having like a card that you can use to like buy stuff in a shop, even if you're not using it day to day. I think, even though that's not your flagship product, that does change the way people think about it from something that's a store of wealth to something that's an actual usable currency. Speaking of which, where do you think crypto is going to go, as a market into 2024? I mean, we talked about FTX. Share prices of Binance and Coinbase are pretty low compared to the historical highs. You've got the court cases with the SEC losing to XRP, and so on and so forth. What's going to happen in the macro in the next 4 to 5 years?
I mean, being in this industry for 10 years, I can say it's quite a cyclical market. So, there are ups and there are downs. And I think if there's anything that's maybe almost certain, that in this market, there are ups and there are downs. I mean, if it's only going in one direction down, I don't think the FCA and other regulators would be so proactively trying to regulate this for the future. So, as much as
a good point.
Regulation is a bit of a downer, sometimes, if anything, gives promise that there is, maybe a new plateau of productivity in the future, Gartner hype cycle. There's things that can be done. So I do think the landscape is going to change quite a bit. We've seen it in other more investing-focused industries. I guess the CFD industry had a bit of a shakeout with regulation a few years back as well, and now sort of fall in line with a more broadly accepted, investing regulatory framework. And I see parts of cryptocurrency also falling in those things. But for every cycle, there are interesting and new ideas coming out from cryptocurrency as well. I think we've seen ICOs, we've seen NFTs. We've seen crypto art come out as well. So, as much as some of the aspects are going to fall into maybe more predefined frameworks, I'm always excited to see what's next in the next market upswing and what people come up with.
Yeah, well, something that I've speculated on is, do you know how impersonation online, right, and the use of AI to like create videos? I thought potentially there's going to be a future where everyone's going to have an NFT which is attached to their name, so that you can't copy it. So but I don't know. It is really interesting going forward, because the market crashed, and we're talking about a crypto winter. And as you say, all of these regulators are still interested in regulating it. So there is an argument to be made, like you say, that they wouldn't bother unless the market is going to resurge at some point in the near future. I mean, presumably, I'm imagining that you own some cryptocurrency yourself personally. Do you think there's a best crypto to buy now? Say, if you can't sell for the next 10, 20, 30 years, what would you be investing in if you were just a retail investor? Not advice, of course.
Personally, I think I'm probably involved into cryptocurrency for as much as ideological reasons as, financial gain. So, I'm mostly a Bitcoin person. But on a percentage basis, if you look just at a pure growth level, I think it'd be difficult for maybe Bitcoin or Ethereum to reach a pure growth in percentage terms as some of these newer projects out there. So I think
they're too mature, are they?
Just on a percentage basis, if you're in it for purely speculative reasons, then trying to pick coins which have most growth potential or could make a most dent in the crypto ecosystem. But personally, as I said, my strategy is probably a bit longer term and a bit ideologically driven. So, I think I started when there was only Bitcoin, and still quite a bit of a Bitcoin fan right now.
I think I bought Bitcoin when it was like $400 or $500 years and years ago, and I sold 100% up. This is not financial advice, and I thought I was the cleverest person in the world, and now I wish I hadn't. So, I mean, and the thing is, there's thousands and thousands of people like me out there. You think you've reached the top and you haven't, but then obviously you never know. One thing I found really interesting at the start of the Ukraine war, so this is in March 2022, and obviously you had a lot of people fleeing the borders, because the banking system had so many problems. They had lots of issues, but people with like Bitcoin on a USB stick could just cross the border with no issues. And like, it's that kind of like flexibility with currency that you just don't have anywhere else.
I've heard
so it's going to be
reports
interesting.
of Ukrainian banks also accepting Bitcoin as well for exchange.
Yeah, well, they are now. So yeah, I mean, it's getting more and more mainstream, which is a good thing. But then I guess that's why the regulation is becoming such a much bigger part of it. You know, all the regulators around the world, I think some of them secretly hoped that it would just die a death and just be forgotten about. And that hasn't happened. So now they're having to face up to it and regulate it. And then the problem with that, obviously, is how much regulation do you do without stifling the innovation in the market? And I think that's going to be a key question going into next year.
I was going to ask you, Asher, actually, do you have one of these prepaid cards yourself?
Yeah.
Yeah? Do you use it? Is it... He's going to get it out of his wallet. For those watching in black and white, there it is, the CoinJar MasterCard. Yeah, I do like that idea. Like you say, I think it's quite a nifty little idea. And as you've just been saying, you know, you can actually, you know, cross borders, whether it's through.
It also has a digital version on your phone. If you're not inclined to plastic, you can add to Google Pay or Apple Pay and use it on your phone.
Great upsell. Love that. Go and get your CoinJar MasterCard today. Visit Investing Reviews and search for CoinJar. Great stuff. I don't know whether you listened to any of our podcasts or not, Ash. It'd be great if you did. But I was just looking back, actually, episode 7, which was some time ago now, probably this time last year. We interviewed a chap from Easy Crypto Hunter who claims that his company turns cow manure into cryptocurrency. I don't know if you've heard that story.
No, it's my first time.
Oh, there you go. Well, you'll have to give it a listen. Basically, what he does is a lot of these farmers, but we're talking big farms, big cow sheds, they basically turn the cow poo into energy, and that energy is then usually pumped back into the grid at a fixed price, but they have excesses of this electricity. So he's just basically said, use that cow shed, plug these I think they're basically graphics cards, mining rigs, and so the excess electricity can't sell. Instead of just letting it go, they mine cryptocurrency. There's a film about it, actually. It's quite interesting. You remember that one, Charlie, don't you?
I do remember that one well. We've interviewed some eclectic people and some really awesome people. And I this is one of the best things about this podcast. We just, you know, whoever looks interesting, come on, we'll have a chat.
Well, exactly. You know, I mean, we're obviously talking to you today, Asher, because of the FCA rulings that are coming through. But I think there's two ways to look at this. And if you look through the lens of compliance, so a lot of people say, it's going to destroy the market, or it's going to restrict this, it's going to do that. I see this as an opportunity, clearly for you guys, because you're one of the only regulated cryptocurrency exchanges operating both in the UK and regulated to sell crypto assets to UK customers. Those that haven't or are not, as you say, have either a window to do it or not, and pull out of the market completely. So interesting you mentioned Coinbase and Binance. It'd be interesting to get the CEO of Coinbase on our podcast and listen to his side of the story.
Yeah. I mean, I would love to hear what some of these companies have planned for the UK. I think it's a bit ambiguous right now. Even at this point, some companies have put out messaging, but I think there's still big question marks. And if I'm a user on one of these exchanges, I would love to hear what the exchange plans to do.
A cynical part of me thinks they've only given them a few months to comply, essentially to punish them for not having done it in the first place, not having done everything they should have.
Oh, Charlie, why so cynical? Come on.
Well, I don't know. I mean, if we've all worked in finance for years. Generally, the FCA gives you a decent length of time, right, to get your books in order. But this time they've chosen not to. Well, there's got to be a reason why. And I can't help but think somebody there has decided just throw a hammer down. And obviously you guys at CoinJar.
They had 6 months. They've had 6 months notice on this, haven't they, Asher?
Yeah.
Yeah?
That's nothing.
Oh, come on. We get compliance request changes from not named trading platforms to change compliance risk warnings within 24 hours or risk.
Now, to be fair, I do those.
Oh, is that you? Is it you that does this?
It's not me that sends them, but I get them all the time. I think, Well, whenever you're publishing anything on like a regulated platform, whether it's IG or anywhere else, the compliance team are always like on you to make, and the rules are changing. Not the rules, but the best practice is changing all the time. So often you'll publish something, then you'll get an email saying you change a sentence or word or whatever else, and obviously you comply.
That's an interesting point, isn't it? Because obviously FCA regulations for CFD brokers stipulate they have to have a risk warning visible on their website at the percentage risk of the customers that lose money by trading CFDs. Do you think that's something that will happen with cryptocurrency, Asher?
Yeah, I mean, there are new batch of risk warnings coming up for cryptocurrency websites. I don't think we can quantify it the same way that CFD exchanges do, but I think if anything, the risk warnings and standard that they're setting for cryptocurrency is just as high, if not higher already than what the other platforms have had to go through. Yeah,
I've seen your risk warning on your site, and it just basically says don't prepare to invest in cryptocurrency unless you're prepared to lose all your money, which is pretty standard risk warnings for everything.
For anything, pretty much, yeah. I mean, it's I mean, CFD market, 70% of people trading CFDs on average lose money. But then obviously I think the question is adults should be able to invest or trade with their own money as long as they have that risk warning, as long as it's there. And obviously only a third of people, are generating profits consistently, but then that doesn't mean that someone can't have one good year or one good month. Whereas when you're looking at long-term investing, so cryptocurrency, for example, you're buying some Bitcoin or some Ethereum or whatever. Again, not financial advice, but the asset class as a whole has, as far as I'm aware, has outperformed pretty much everything else over the past 10 years, even with the crypto winter. Whether you look at the S&P 500 or gold or, Tesla or anything else, Bitcoin, Ethereum have outperformed if you were investing 10 years ago. So the argument you could make is, yes, you need to have a risk warning, but actually the risk compared to, say, equities or commodities may not be as high as what people think if you're sticking to those sort of larger, coins.
Never advice, Charlie. Good stuff. Well, thank you very much for joining us on the podcast, Asher. I've really enjoyed talking to you, and I think the future of cryptocurrency is by no means over just because the FCA decided to put some regulations in place. And 6 months notice, Charlie, that's plenty of time for any compliance team, in my opinion. 6 months.
Well, they're probably running around sweating right now because there's I don't know. It looks like a lot to me personally, but then if you haven't prepared, that's your problem. I think
you've had plenty of notice. Asher, thank you very much for joining us again.
Thanks, gents. Definitely give the manure recycling and crypto mining podcast a listen in my free time.
Give it a listen. Episode number 7, investingreviews.co.uk/podcast. Charlie, thank you very much. Let's cue the music. Thank you for listening to That Investing Podcast, brought to you by the team at Investing Reviews. Check out our latest stock market news and analysis at investingreviews.co.uk. You can also find us on Twitter and LinkedIn. Just search for Investing Reviews.